If you've been told you need perfect credit and a huge down payment to buy a home, that's not true. In 2026, FHA will continue to be one of the most flexible loan programs available as long as you understand the updated FHA loan requirements for 2026 and how the numbers actually work. Today, I'll break down the updated FHA guidelines for 2026 and walk you through a real $600,000 example step by step. All right, so before we get started with the numbers, I want to be clear about one thing. I'm not a licensed lender. Everything I'm going to share in this video is from conversations I've had with my lenders, and it's based on my experience in the real estate business, not on issuing loans. I do work closely with a small group of lenders that I personally trust. If you'd like to speak with a licensed professional, you can email me and I'll make sure to connect you with one of them. And that said, it's always your choice which lender you work with. You're never obligated to use anyone I recommend. All right, now let's talk about FHA under the 2026 rules. FHA loans are not just for first-time home buyers, they're not just for people with low credit, and they're not just for people barely qualifying. Under FHA loan requirements, FHA is simply a loan for anyone buying a primary residence that meets the guidelines. Under the updated FHA guidelines for 2026, your credit score will affect how much you need to put down. If your score is 580 or higher, FHA allows 3.5% down. And that's the scenario we're going to be using in this 2026 example. All right, so let's put real numbers on this using the FHA rules. You're buying a $600,000 home, your credit score is 580 or higher, 3.5% down is $21,000. After the down payment, your base amount is $579,000. Now here's the part most buyers don't expect with FHA. FHA charges an upfront mortgage insurance premium. It's 1.75% of the base loan, and most buyers roll it into the loan. So on $579,000, that fee is about $10,132. When it's added back in, your total FHA loan amount becomes roughly $589,132. So under the FHA loan structure, even though the home costs $600,000, the loan you're financing is just under $590,000. And that's normal with FHA. And yes, FHA mortgage insurance increases the loan amount. But in today's housing market, the alternative to that for many buyers is waiting years to save more money or qualify for another loan program. So for a lot of buyers, FHA is a starting point, not a forever loan. What you can do with the program is you can buy now, build equity, refinance later if it makes sense. Another major factor under the 2026 FHA requirements is your debt to income ratio, or DTI. DTI is your monthly debts divided by your monthly income before taxes. It's not groceries or lifestyle spending, it's what shows up on your credit report, plus the new housing payment. FHA guidelines in 2026 are often more flexible here than conventional loans. Under the 2026 FHA rules, loans are for primary residences. You need to plan to live in the home. You can't just buy it strictly for an investment. That said, FHA in 2026 can still be used for single-family residences, some condos, and even 2 to 4 unit properties as long as you live in one of the units. All right, let's talk about the loan limits. FHA loan limits for 2026 vary by county and are updated regularly. So always check the limit for your specific county before shopping. All right, so what documents are needed? To get pre-approved under the FHA 2026 guidelines, most lenders are going to ask you for 2 years of income, recent pay stubs, recent bank statements, a government issued ID, and permission to pull credit. That credit pool is going to allow lenders to give you real numbers and not guesses. So to close, FHA will continue to be one of the most powerful tools available to buyers in 2026. The key is understanding how the updated FHA loan requirements for 2026 actually work, especially the down payment and mortgage insurance. All right, that's it for this video. If this helped, please hit the like, subscribe, and drop your questions below. I'll see you guys on the next video.